I made $5,378 this month, and I didn't start a business, launch a course, or follow some get-rich-quick scheme. I used a strategy from someone you've definitely heard of, Warren Buffett. Now, before you roll your eyes and think, yeah, Buffett's a billionaire, of course he makes money. Hear me out. Because this isn't about being rich already. It's not about timing the market or finding some secret stock tip either. What I used was something Buffett's been preaching for over 80 years, and most people still don't get it. But here's the craziest part. He figured it out when he was just 11 years old. Let that sink in. 5,378 euros this month. An 11-year-old's mindset, and a simple principle almost anyone can apply, starting today. So, how did Buffett turn a childhood curiosity into a multi-billion-dollar empire? And what does that have to do with how I made thousands this month? Stick with me, because once you understand how he thinks, it will change the way you see money forever. It was 1942. The world was at war. Gasoline was rationed. Families were sending their sons off to fight. It wasn't a time most people were thinking about investing. But Warren Buffett was. He was 11 years old, and with just $14.75, which was literally every penny he had, he bought his first 3 shares of a company called City Service Preferred. He didn't know it at the time, but this one small decision would kick off a mindset shift that built him into the investor he is today, worth well over $100 billion. But here's the thing. He didn't get it right at first. Warren thought investing was all about predicting what stocks would go up or down. He was glued to the market. He studied charts. He read hundreds of pages of technical analysis. He was obsessed. But after years of treating stocks like little arrows on a screen, something changed. At age 19, he picked up a book that changed everything. The Intelligent Investor by Benjamin Graham. And right there, in those pages, he realized something shocking. He had been doing it all wrong. He wasn't supposed to be guessing what would go up next. He wasn't supposed to be glued to price charts. Instead, he finally understood. Stocks aren't lottery tickets, they're businesses. And from that moment on, Warren stopped picking stocks and started buying businesses. Let me say that again, because it's the whole key to how this works. He stopped buying stocks. He started buying businesses. And that change in thinking? That's how I made over 5,000 euros this month, without chasing trends or hoping something would spike. Warren says most people treat the stock market like a casino. They get excited when stocks go up and depressed when they fall. He says 90% of people think about investing the wrong way. And honestly, he's right. Most people are looking for a quick win. But Warren? He's playing a completely different game. One where patience and logic win, not hype and emotion. He says he doesn't even care what the market does tomorrow, or next month, or even next year. Why? Because he's not investing for the next headline. He's investing in companies that solve real problems, generate cash, and last. So when the market goes down, he's happy, because now he can buy more of a great business, on sale. And I'll be honest, that one mindset shift alone changed how I invest. I stopped refreshing stock apps every day. I stopped chasing the next shiny thing. I started acting like a business owner. And surprise, surprise, my money started working for me instead of stressing me out. But here's the deeper lesson most people miss. Warren Buffett didn't just get rich because of some stock picks. He got rich because of 2 things: time and consistency. He started early, he stayed consistent, and he stayed in the game. He says he's never had less than 80% of his net worth invested in American businesses, and he wasn't hopping around trying new strategies. He doubled down on what worked. Buffett doesn't care about owning fancy cars or 5 homes. He lives in the same house he bought in 1958. Why? Because for him, the real wealth comes from doing what he loves and watching his investments grow quietly, steadily, over time. He once said, "You don't need to be a genius to succeed in investing." In fact, having too high of an IQ can even work against you because you overthink things. What you really need, he says, is the right mindset. A mindset that says, I don't need to chase fast money. I'm buying a business, not a ticker symbol. I win by staying in the game longer, not by being the smartest guy in the room. Now imagine this. What if there were no stock market at all? What if the only way to invest was to buy a farm or a small local shop or a group of apartments, and you couldn't check the price every day? Would you still buy? That's how Warren thinks. Every time he puts money into something, he asks, would I be okay owning this if I couldn't sell it for 10 years? If the answer is yes, he buys. That's the genius behind it. And it's exactly why, when I started using this approach, the pressure disappeared. I stopped worrying about how much I made today and started thinking, how much value does this business create? And let's zoom out even further. Buffett isn't just bullish on businesses, he's bullish on America. And for good reason. He says if you look at the last century, no country has created more opportunity, wealth, and innovation. Even the bottom 2% of earners in America today live better than the richest people did a century ago. Better medicine, better technology, better food, entertainment, and freedom. He says if you told someone from the 1700s what the future would look like today, they'd send you to an insane asylum. And he's right. Electricity, airplanes, the internet, smartphones. All of that exploded in the last few generations and created wealth like the world has never seen. So what's the takeaway? Simple. Buffett didn't get rich betting on luck. He got rich betting on progress. He didn't need flashy tools or perfect timing. He needed patience, common sense, and a willingness to think long-term when everyone else was chasing short-term highs. And that's what I did this month. I followed the same principles. I stopped guessing. I stopped reacting to headlines. I bought a handful of strong, boring, well-run businesses, and I gave them time to do what they do best: grow. No magic, no stress, just smart decisions, compounded over time. And if Warren Buffett could figure that out at 11 years old, what's stopping you or me? Because honestly, the real genius behind Buffett's strategy isn't that it's complicated. It's that it's simple, and almost nobody actually follows it. But the few who do, we quietly make money, month after month. So yeah, I made 5,378 euros this month using a genius Warren Buffett strategy. And now that you know what it is, you can start using it too. Not tomorrow, not next year, today. Because time, not timing, is what builds wealth. And the earlier you start thinking like an owner, not a gambler, the better your future will look. Trust me, Warren's been right for over 80 years. And now, I finally see why. But here's the question you might still be wondering. Is it too late to start now? The answer? Absolutely not. Warren Buffett didn't become a billionaire in his 20s. He became a billionaire in his 50s, and his fortune exploded in the decades after that. In fact, over 90% of his net worth was made after his 60th birthday. So no matter your age, no matter how much or how little you have to invest, it's not too late. The real key is to start thinking differently. Ask yourself, are you chasing money, or are you building value? Are you buying stocks because someone hyped them, or because you understand the business? Are you investing like a trader or like an owner? You see, when I looked at my portfolio before using Buffett's mindset, it was filled with flashy names, meme stocks, crypto experiments, and panic sells. It wasn't investing, it was guessing, and I was losing time. Now, my investments are boring but profitable. They grow. They pay me dividends. They don't keep me up at night. And that peace of mind? Honestly, it's worth more than the money. Let's talk about something else Warren is famous for. Doing nothing. Yup, you heard that right. Buffett once said, "Lethargy bordering on sloth remains the cornerstone of our investment style." Translation, he's in no rush. And that's powerful. We live in a world that's obsessed with hustle, speed, constant action. Buy, sell, react, panic, repeat. But Buffett does the opposite. He studies, he waits, he acts rarely, but decisively. He once said he's had maybe 20 good investing decisions in his entire life. Just 20. But those 20 decisions made him one of the wealthiest people alive. It's not about volume, it's about clarity. When I heard that, I realized something important. I didn't need 100 wins. I just needed a few great decisions and the patience to let them work. And here's one more thing people forget. Buffett isn't just investing money, he's investing in trust. He says he loves being trusted by people, that he could sit alone and maybe make more money. But he chooses to work with others, with partners, with shareholders. Because money matters, but reputation matters more. And that's another part of his genius. The best investors aren't just smart with capital, they're consistent with character. They do the right thing, even when no one's watching. So if you want to follow Buffett's strategy, don't just copy what he buys. Copy how he thinks. Copy how he treats people. Copy the way he plays the long game in every area of life, not just finance. Because honestly, it all connects. Now let me make this practical. Here's how I applied Buffett's strategy in 3 steps. Step 1. I stopped checking prices every day. I stopped treating my portfolio like a slot machine and started treating it like a farm. I don't check my plants every hour. I just keep watering them and let time do the work. Step 2. I only invest in things I understand. If I can't explain what a business does to a 12-year-old, I don't put money in it. Sounds simple, but it filters out 95% of the market noise. Step 3. I look forward to dips. Now when the market drops, I don't panic. I get excited because everything's on sale. If I believed in a company last week, I should be happy to buy more of it today for cheaper. That's what Warren does. That's what I do now. And that's how I made over 5,378 euros this month. Not from luck, but from logic. So where do you go from here? Start by asking yourself one powerful question. What would Warren do if he had my portfolio today? He wouldn't try to get rich by Friday. He wouldn't follow TikTok traders. He'd look for long-term value. Businesses with real income, loyal customers, good leadership, and smart growth. Then he'd buy and wait. And while everyone else is refreshing stock prices, Warren, and maybe you too, will be building something that actually lasts. Look, you're not going to turn 100 euros into 1 million euros overnight. But if you can shift your mindset just like Buffett did at 19, you're planting a seed. A seed that can grow into financial freedom, peace of mind, and maybe even wealth that lasts generations. That's the power of this strategy. So whether you're just getting started, or you've made mistakes in the past, it's never too late to start thinking like Warren. The results might not come instantly, but if you stay consistent, the results will come. And who knows? A few months from now, you might be saying, I made 5,378 euros this month, using a genius Warren Buffett strategy.